Eric Muathe at Muathe.com. In front of us, we have the chart for Under Armour, all monthly data. And so here we see that the stock has had a couple of important periods. We have this bullish phase, and now we have what seems like the beginning of a bearish phase. And to understand these two periods, we have to understand what is controlling. And take a look at my YouTube channel, because there are two main principles here. The first one is what I call the ultimate Muathe breakout, which will explain the explosive phase. And of course, the second one is what I believe is the reason why the stock is pulling back and why some of us have been expecting a pullback. It's based on the ultimate Muathe sell signal. So take a look at this if you want some more in-depth into the technical reasons and understanding for these two concepts. So let's go to the chart. And of course, we would like a method that would capture some of this tremendous up move. Stock move from, let's call it here, under single digits, $5, $3, $4 area to the highs of 55 in a couple of years. That's a huge return. Let's take a look at where the actual movement began. And so we go to the ultimate Muathe breakout, and you can either use this breakout right here in the RSI. So we're talking about this period here. That's what we're trying to capture. And what we see here is there was RSI moving to all-time, actually 3-year highs, 3-year highs at the time, and also moving above 61.8 on the monthly RSI. So keep that in mind, because it will come back again. I'll explain why. And we can also see that at the time you got your MACDs, at least one of the MACDs moving to 3-year highs. So it meets the minimum requirement, whichever way you want to cut this. The main MACD was also moving to 3-year highs. Now remember, the requirement is one of the MACDs should be moving to 3-year highs at the same time when the RSI is moving to 3-year highs. And of course, we'd look for a breakout on the monthly chart. So again, we're talking about this time period here, and there was a breakout for sure somewhere here. So that breakout, as you can see, was instrumental in beginning a nice run, and the stock would go on a major run. So we know that that's hindsight, no big deal. So we see that the minimum requirement was met. And again, this is best or based on this method here. Check out my playlist on YouTube. Now, since that breakout somewhere there, sometime in 2010, and of course we're talking about that monthly breakout there, the stock would go on a fantastic run. All right, so that's the bullish phase. Let's take a look at this, what seems like a bearish phase. Some of us have been expecting a pullback, and it is playing out perfectly. So based on this method here on my YouTube channel is a long playlist, lots of videos discussing this concept. Let's take a look at what the chart has been saying. And what we see here is over the last couple of months, in fact, going back right there, the stock moved to a 3-year low right there. This corresponds with the RSI coming off the highs somewhere there. There was a break. RSI moved to 3-year lows. So there is your 3-year requirement. The RSI breaking down there. Also, we can see that that corresponds very nicely. And again, we're talking about this period right there. So that's the period we are trying to capture. So RSI moves to 3-year lows. One of our requirements. Let's take a look at what the MACD was doing. MACD moves to 3-year lows, in fact more than 3-year lows. At this particular point, the MACD is moving to 6-year lows, so that's what one of our minimum requirements. So we need only one of the MACDs, which we get, and the RSI to make a move to 3-year lows. And as far as the main MACD is concerned, we can see that it was not moving to 3-year lows at the time, but that's not a big deal because one of the MACDs did move to 3-year lows. That's why we've been bearish on this stock over the last couple of months, and we see it now continuing to push lower. So remember earlier I talked about that level at 61.8. Let's take a look at that. what we can do here is draw a simple line right here at 61.8 roughly, and this line is packed with information. Here it gave us the buy signal we talked about before the run, and take a look at all the support levels. Support here during the lows of 2011, double bottom support here on the same line during these lows here of late 2012, early 2013, which was successful. And then we see now the break below 61.8 after the stock tried its best to hold support but failed. It tried to hold support here, finally gave up that, and would break below that level. It's been down since. So we can see that the same level we're talking about, 61.8, was a buy signal. Here it became support, and failure down the road. So keep in mind that these are critical levels in a stock, and if you can understand how a stock is behaving in relation to such levels, sometimes you get a very clear and simple insight as to what is going on. So let's take a look at especially in terms of where it could find support. So what we can do here is very simple. Figure out the ideal entry in the stock, and of course the ideal entry comes from this RSI movement here. So once we moved above this range in early 09, the stock has never looked back. Those are the actual all-time lows on a monthly basis. And so what we do is we draw a simple line from here somewhere there, and you can see that what the stock is doing right now as we come close to the end of the month of October 2016 is, if in the coming months it can hold this green line, then somewhere around here is where you can expect it to find some type of support and for it to move higher. So anybody who's holding this for long-term basis wants to find a reason to re-enter the stock, you can use this line as a future reference point. And again, I say let's keep in mind 61.8. We all know that 61.8 is interchangeable with what? 38.2. The stock is coming back to test this green line. This green line happens to be at about 38.2, as you can see there. If it can hold in the coming weeks, coming months around this level, this green line might be the next layer of support. Otherwise, clearly, if we cannot hold above the green line, if we slide below the green line, that's gonna be a fresh sell signal. Now, one more slight observation before I get out of here, and it is a simple one, and you have to understand this, and it is the fact that we see the stock having a big drop on a monthly basis. Why is this monthly drop substantially and relatively of some big size? Why? Because we see that the stock is moving below, you guessed it, RSI 50. As you move above RSI 50 or below it, you tend to have a huge reaction in terms of relative price action. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. I am out. Yeah.